Last week was successful for the Wall Street indexes. Today, the US stock market is poised for quiet trading, and the Federal Reserve is keeping silent this week. Investors digested crucial macroeconomic data. Market sentiment will depend on the corporate reports. Despite early optimism, the benchmark stock indexes did not log significant growth on Friday. Still, all of them closed in the green. The Dow Jones added 113 points or 0.33%. The Nasdaq closed 0.18% up, and the S&P 500 inched up by 0.1% to close at 4,505 points. The major stock indexes traded mixed in the New York pre-market today. The S&P 500 is expected to trade in the corridor between 4,480 and 4,550 points. Investors cheered upbeat corporate reports of the US top banks early Friday. Later on, the stock indexes pulled back. Optimism ebbed away due to the decline in energy stocks, which hurt the S&P 500 the most. As a result, the index lost 2.8%. Shares of JP Morgan rose by 0.6%, but Wells Fargo shed 0.3%. Both major banks reported higher quarterly profits, but said they had put more money aside to cover expected losses on commercial real estate loans. Citigroup shares fell by 4% and BlackRock lost 1.5% as both the giants reported lower quarterly revenues. The S&P Bank Index dropped by 0.9%. At the same time, support for the indexes and in particular the Dow Jones was provided by shares in the medical services segment. Despite a rather weak close on Friday, the Dow was up 2.3% for the week, and the S&P jumped by 2.4%, and the Nasdaq increased by 3.3%. It's the best since March. The S&P 500 is up 17% since the start of the year. The confident growth of the indexes amid easing inflationary pressure and the fact of updating more than 1 year highs last week aroused the questions among investors. How is the rally justified, and has the momentum dried up? The answer may come from large corporations, as the Fed is silent this week, and the key macroeconomic data was released last week. Monday is a quiet day in the corporate sector. The corporate earnings season will get a fresh start on a Tuesday, along with the reports from Bank of America and Morgan Stanley. Wednesday will be jam-packed with the tech giants Tesla and Netflix taking the floor. In the pre-market, Tesla shares showed the most notable growth. The shares added 2.16% after Tesla said on a Sunday it had built its first Cybertruck after a 2-year delay. In addition to Musk's company, Zuckerberg's company also distinguished itself. Meta shares fell by 1% after the Norwegian Data Protection Authority said the social network would be fined $100,000 a day for breaching privacy unless it takes corrective action. Following the plunge, shares regained some losses. During the week, investors are also anticipating the data on retail sales and housing starts for June. In the currency market, popular currency pairs traded in the pre-market with the same trends as last week. However, the US dollar index regained its footing in the early New York session, having climbed by 0.08%. The index traded at about 100 in the early hours. It's likely to trade in the intraday corridor between 99 and 80 and 101 and 30. The instrument completed last week with the sharpest weekly fall for the year, and the greenback weakened due to the U.S. resilient economy and the healthy labor market and waning inflationary pressure in all categories. The economic picture assured investors that the Federal Reserve would have to wind up its cycle of monetary tightening after the meeting on July 26. Hence, investors shifted focus towards the euro, and the ECB is widely expected to raise the refinancing rate next week. More rate hikes will follow. As a result, the euro extended its growth on Monday and reached 1.1244 against the US dollar, the strongest level in 16 months. The euro looks heavily overbought, so a downward correction will follow. Analysts are also puzzled about massive sell-offs of the US dollar. On the back of the empty economic calendar, the euphoria about disinflation could take a backseat because investors might recall comments by some Fed policymakers who said that a slowdown in inflation was not enough. Thus, one more rate hike is in the course. The Canadian dollar was bruised by a plunge in oil prices on Friday, and today the loonie is licking its wounds. The USD CAD pair dipped by 0.11%, intraday to trade at 1.3201. The instrument is likely to trade in the intraday corridor between 1.3180 and 1.3240. Despite the support from the Bank of Canada and the rate hike last week, the loonie's strength is dampened by volatility in the oil market. Oil prices fell on a Monday after weaker than expected economic growth in China added to fears about demand from the world's second biggest oil consumer. China's GDP expanded by 6.3% year-on-year in the second quarter, weaker from the consensus of 7.3%. And the post-pandemic recovery is rapidly losing momentum amid tepid domestic and overseas demand. Brent crude dropped by 1.2% to $78.86 a barrel, while WTI fell 1.07%. Both benchmark rates posted gains and reached their highest level since April last week, supported by OPEC Plus production cuts and the production problems in Libya and Nigeria. Already on Monday, production at two of the three Libyan fields was restored. The crypto market has calmed down after the euphoria last week. The popular cryptocurrency is consolidated at lower levels. Bitcoin dipped by 0.2% in midday to trade at $30,222. Almost all altcoins except Litecoin traded in the red. Litecoin grew by 0.6%. Ethereum, Solana, Ripple, Cardano and Binance shed from 0.01% to 1.5%. Last week, the market boost was triggered by Ripple's victory over the U.S. Securities and Exchange Commission. Trading activity in the crypto market has grown significantly. According to various sources, trading volumes rose by 10 and 30% on Friday on almost all key crypto exchanges. Nevertheless, the ambiguous wording of the judgment and the prospect of an appeal by the Commission cooled market optimism. In addition, the information background arouses alarm bells among crypto investors. In particular, they are speculating that watchdogs are tightening regulation of crypto assets. This idea was discussed at the G20 summit. Besides, Binance announced more layoffs. Against this background, Bitcoin has a modest intraday outlook. The token will most likely trade in the range of $30,000 and $30,500. Going beyond the range may lead the price to decrease to the level of $29,600 or to increase to $30,800. Make profits with the InstaForex. Keep close tabs on financial markets on InstaForex TV channel with us. And see you soon!